Well, Stats Canada just released November retail data for it coming out today, a few minutes ago. Actually, retail sales increased 1.3% to $70.4 billion in November. Sales were up in 8 of 9 subsectors, led by increases in food and beverage. Here to talk about the numbers is Randall Bartlett, Deputy Chief Economist at Desjardins. Randall, thanks very much for joining us.
Oh, thanks so much for having me.
Okay, just a general overview, your thoughts on that number and how the rest of it looks.
Yeah, I would say it's unambiguously a positive number for the Canadian economy. When we look at what was under the hood, we see, as you mentioned, 8 out of 9 subsectors were up in the month. We saw a rebound in some sectors that fell pretty sharply back in October. Things like sales at food and beverage retailers. So that's good news. Ultimately, core sales up 1.6%, retail volumes up 1.1% in the month, and so overall a pretty good print. And I think that it tees up hopefully better news to come.
Good morning, Randall. On the momentum of the Canadian economy, we've sort of, through the challenging beginning of last year, it seems like we've kind of got to a sort of stall speed but positive growth. I think this number kind of feels consistent with that. But I'm wondering where you think this might increase or decrease the impetus of the Bank of Canada from here. And have they made clear that they're kind of now, pause and going to hold for a while? Because the economy doesn't seem to be deteriorating, and at the same time, it's also not reaccelerating. And so we're kind of in this stall speed moment, it feels like.
Yeah, I think that's a great way of characterizing it. I think this isn't really going to move the Bank of Canada at next week's meeting, and we think the bank is likely going to hold. And I think it's telegraphed that pretty clearly. And today's retail release isn't going to move that all that much. We've seen that retail sales have really just sort of been in a bit of a zigzag pattern sideways throughout the year after a very strong acceleration in 2024. So ultimately, Canadian consumers, spent a lot last year. There's a lot of reasons for that. HST, GST holiday, motor vehicle rebates, particularly for EVs. And so ultimately, Canadians, given all of the uncertainty and the relative weakness in the labor market, we've seen Canadians just sort of, stay on the sidelines, not really cutting consumption and retail spending, but also not increasing it either.
And is this a case on some of them? I saw looking at Alberta motor vehicles, parts were up. Is this people finally they held off and now they're taking the plunge, they have to get these things?
Yeah, it's really tough to say whether it's sort of a one-off in the data or whether it's is a reflection of broader economic trends. Certainly, it's I would say it's a positive given sort of the weakness in the motor vehicle sales that we've seen sort of in the middle part of the year as people tried to get ahead of the retaliatory tariffs that were on early in the year on imports from the U.S. We saw a lot of motor vehicle purchases. Ultimately, that kind of dried up in the middle part of the year, and so hopefully it's a harbinger of some positive momentum on that side of things. But overall, I think that sort of stall speed and consumer spending is really where the Canadian economy is at right now. When we see that inflation remains still better than the Bank of Canada's 2% target, just slightly north of that. We see that particularly food inflation remains quite elevated in Canada. So households are still feeling a bit of an affordability squeeze, and so we think that's probably being reflected in those retail numbers as well.
One of the highlights from the budget last November was that increasingly it looked like Canada and the federal government was going to look at increasing defense spending and sort of pivoting to this sort of industrial policy and encouraging investment from the private sector. I'm wondering if you're seeing any sort of either directionally positive things within the private sector that would be consistent with the baton starting to be handed off. And I think Carney's speech in Davos this week is getting a lot of attention. But I'm just wondering if you're seeing any positive signs from the private sector of actually now, heading into the next phase of this.
Yeah, one of the tough things in trying to read the signals in the data right now is that there's so many conflicting forces hitting the Canadian economy, particularly when it comes to the investment side of things. So you've had all of the uncertainty created by the trade war, plus now in 2026 we've had the regime shift in Venezuela, ultimately putting downward pressure on heavy oil prices in Canada. So ultimately that's going to create more uncertainty when it comes to investment in the energy sector as well. So my sense is that the federal federal government is doing a lot of the right things, trying to provide support for private sector investment, reduce the time for evaluation of projects, try to harmonize regulations across provinces so there's not duplication. It's one project, one process. And so I think the federal government is doing a lot of the right things to create a positive investment environment in Canada, both for domestic capital and international capital. But the challenge is that it's up against significant external headwinds, really not of our own making as a country. So I think we're headed in the right direction. The question is ultimately which is going to win out the day in terms of the external shock that's coming largely from the U.S. or the support that's being provided by the federal government, both on the cutting red tape and in terms of using its fiscal firepower as well.
Just looking at one of the numbers I found interesting, retail e-commerce sales in Canada were off by 2.8%. Any indicators as to why? Does that tie in with not ordering from the U.S. or people just decided to go out and buy things?
Yeah, it's an interesting number because these are seasonally adjusted data, and so they're trying to remove some of the seasonal patterns that we see. But November data will pick up Black Friday sales, and so ultimately, we've seen this move toward buy Canadian and away from Canadians purchasing goods from the U.S. And so, no doubt, this is probably getting picked up in this data. It's kind of tough to tease out what is the different causal factors here, but we've seen that e-commerce has been relatively weak recently, and so I think it really is partly a function of this buy Canadian tilt by consumers here in trying to support Canadian businesses that have been hit by the trade war with the U.S.
And I think I just want to sneak in one more question. We're almost out of time, but the advanced retail indicator is looking at a decrease for December, 0.5%.
Yeah, I mean, again, this data sort of had this zigzag pattern moving sideways recently, so not really a big surprise there. We'll see how the numbers shake out ultimately, but I would say StatsCan's flash estimates have been relatively close to the number that we see at the end of the day. It covers the December number covers over 60% of retail companies surveyed, and so ultimately, the number should come in fairly close to that in my view.
Okay, we have to wrap it up there, Randall, but thank you as always for joining us.
Oh, my pleasure. Thanks a lot for having me.
Randall Bartlett is Deputy Chief Economist at Desjardins.